Well, well, well. Global markets experience a significant correction as we move into the afternoon of our Thursday trading session. You know, when I wrote this opener, the S&P was down 130 points, NASDAQ down 330, and the Dow down 1322. That's changed a little bit since over the last hour. The Dixie, however, is up on the day, and gold and silver futures are putting in positive gains. Crude oil is crashing. I don't really have any other word for it. Of course, we've seen oil crash, so let's be real here, but negative movement coming out of the Brent. And Bitcoin and the other major cryptocurrencies are putting in their biggest down day in quite a while. Over in China, the CCP seems to be cracking down on miners and OTC providers and their traditional fiat banking abilities, as reports of frozen bank cards belonging to these individuals are starting to pour in. The question we kind of have to ask is this exacerbating or contributing, or will it further contribute to the negative movement that today's correction has begun? Find out in today's exciting episode of Breaking Bitcoin.
Hi, my name is Jude Nelson. I'm an engineering partner at Blockstack, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. This is your daily source for everything markets and personal finance. Hopefully everyone is doing fantastic today, as good as you possibly can on a day in a sea of red, wherever you happen to be and however you're tuning into us this afternoon. Thank you so much for joining us. We've got a whole lot to cover. We're going to get right into the markets. But first, today's show is, as always, brought to you by the Cracking Crypotcurrency Premium Trading Group. And especially with massive movements like these, certainly there's never been a better time to learn how to navigate these markets. Whether you're interested in cryptocurrency, Forex, stocks, or derivatives, all markets that are putting in massive movements today, the Premium Trading Group has you covered. You can join our community of professionals and learn how to build your own objective, data-driven strategy and avoid trading with your gut or suffering under poor discipline and trade management, watching that sap away your progress. You can make the change and join us in our community at premium.crackingcryptocurrency.com. Links are in the description below. All right, guys, we've got so much to cover today. The big story of the day, well, one story that we're going to be covering, because we do focus on fundamentals. We're going to deal obviously a lot. We're going to spend a lot of time in the charts today. I'm assuming we're going to have a lot of requests. Probably do some grief counseling. That's what we specialize in. But the story that we're going to be talking about today is obviously the bank card freezing reports that are coming in from the Sichuan province in China, as well as Microsoft launching the ION network, which is a decentralized identifier, which is going to be a layer 2 protocol on top of the Bitcoin mainnet. It is open source, and I just know, because I remember from the last thing that we did about Microsoft, that there's going to be a lot of hullabaloo about us reporting on this. I'm here to report the news, and I'll leave my hot takes for the end, okay? So just keep an open mind as we get into that. It is an interesting project. It's interesting to see how it's doing. And ultimately, and we'll get into this in the case, like people are already doing this. People already log in with Google and Facebook and whatnot, and this is a decentralized way to do that, even if you don't like Microsoft. But we'll get into that in just a little bit. Boris says, can I call Jay Powell and remind him to turn on the money printers? This is a direct result of them turning on the money printers. I don't know when or how pronounced it will be, but remember that asset bubbles, all bubbles, are a result of money printer go burr, right? You know, not always. Of course, there can be things like tulip mania, where you just have this massive surge of volume into a particular financial sector. I mean, this is a story as old as time, right? And you see this in low cap altcoins all the time. This is why I try to provide a pretty firm foundation on where I stand with this. Listen, altcoins are fantastic to speculate on. I have altcoins that I've held for quite a while, yes. But I mostly stick to the majors, and I mostly stick to USDT pairs, and I mostly stick to trading. The reason why is because, and I just don't adopt that mentality of like, I'm going to go all in on this shitcoin and I'm going to watch it pump ADX and I'm going to take my profits, right? I used to think like that when I was a beginner trader. I used to think that that's what trading was, right? You know, only got one shot, one opportunity to make it big, hit that big trade, go all in. You know, and I had those opportunities and I made quite a bit of money doing that, but I also lost quite a bit of money and I caused myself a lot of undue stress. And ultimately, it's not a strategy that's sustainable. I try to profess and show you guys through the way that I live, the way that I approach the markets, right? daily trading, small chunks of my time each day, managed, disciplined, results driven, statistical, data oriented, objective. And that allows me to have control over my capital and allows me to do this as a sustainable career each and every day. And I've been able to do this for quite a while. And I project myself continuing to do this for quite a whole long time, unless something significant changes. Obviously, as I grow older, as my interests change, I've moved away. I'm far less of an active trader than I used to be because I do so much more mentoring and education now. And that's good for me, right? So, I keep my risk small. There are a few trades that'll come along every single year where I will take, more risk, right? I will take a bigger bet on that trade if I have fundamentals behind it. But 90 to 95% of all my trades are purely technical driven, purely derived from my strategy and low risk. And that allows me to maintain a good, nice, constant, stable income every single month and consistently outperform the markets and outperform just about every other trader. I don't want to, I don't mean that deprecatingly. I'm not trying to toot my own horn, but I just see so many traders come in and crash and burn, right? They make money, they lose a lot of money, they're in, they're out, and but it is what it is, right? That's not the game that I'm playing. But again, my interests have shifted more toward, other things as well, right? I'm stacking gold, I'm stacking silver, I'm preparing for the currency crisis that's coming up that we're in the middle of right now. I'm investing into real estate because I want to increase that form of active income. That's really passive income, but however you want to delabel it. But anyways. Keep in mind, guys, there is nothing any sovereign nation can do. So anyway, this is the story as old as time, right? So, somebody will, pump some penny stock or, low cap shitcoin and tell their followers about it. Like, hey guys, you got to buy this. This is the next big thing. It's going up all the way to the moon. And, everybody buys into that. The price, goes massively up. And that original influencer or whatever dumps on his followers, and the followers go to sell, and the market's like the exchange, the broker's like, well, who are you trying to sell to? There's no more buyers, right? You were the buyers. All right. Anyways, with that being said, we got a whole lot we're going to cover. Let's get right into it. Hopefully you guys are doing awesome. If you're new to the channel, make sure to subscribe to us here on YouTube. Hit the bell icon. That's the only way you can be notified when we go live. And we do go live every single weekday, Monday through Friday, 12 to 1, sometimes 2 p.m. Central Standard Time. Mark your calendars. And if you really do appreciate the content, smash that like button, guys. We really do appreciate it. Let's get to 50 likes. I do see a lot of you guys in here, and that's always good. It's going to be a good day. We always do get more viewers, of course, when there's highly volatile moves in the market because people are tuning in. They want to know what's going on. And of course, we're live to tell you. So let's get going into the news. If you guys have questions, drop them in the live chat, and we will, the moderators will direct my attention to them. They're there to help. Be nice to them. They don't bite. All right, here we are in the live scene. All right, what do we see? Bitcoin at, hold on a second here. 92.30. Woo! That's a big move. All right, so let's break this down from the macro down to the micro. All right, so here we are on the daily time frame. All right, so we briefly poked our head above the Hall moving average 60 yesterday, right? But of course, no confirmation for any bullish trades. We've been watching Wadatar explosion here for quite a while, waiting for that volume delta to kick in and signify that swing trades are justified to the downside. You guys aren't going to like the takeaway from this. I already know. And it's good. It's good that you don't like it. A lot of individuals are going to be tuning in right now. And if you're not in position, right? If you're not in position, if you're not closing out shorts at this level, or if you're not opening up longs, if you're in an underwater long, or if you're feeling that you need to be going short at this current price level, I'll tell you what I'm doing. I'm not going to tell you what to do, but I'm going to tell you what I'm doing. And so far, we've had no trade due to ATR violation, flashing on and off for the last several hours. And I'm going to certainly wait until the daily candle closes, but this certainly does not seem like the opportune moment to be looking to short the market. Now, that doesn't mean that the movement will not continue, right? I don't catch every single movement, but we're going to be breaking down my justifications for that. But certainly the first thing that I can say, because I always feel the need to say this after a big movement, if you have thrown yourself into a market opened position, and that position is to the short side right now, I'm just going to go out on a limb here and say that, probably rethink your trade. Right? Just take a step back, look at your charts, review your strategy, and ask yourself, did you open up this trade because it represents a trading edge, or did you open up this trade out of fear, right? Or greed, right? And if you opened up the current position recently within the last 20 minutes, and it's not to the long side, and it's a short trade, and it's fear or greed, I would highly rethink that, right? Not saying that you're wrong. Could be technically correct. A priori, I don't know what the market's going to do. Nobody does. All I deal in is statistical probabilities, as all professional traders do, and managing my risk. But just think about that. Think about that. And ask, if you need to think more, ask yourself, how many times have I done this and it's worked out? Not too many times. All right. So anyways, let's break down the daily. Super interesting. So obviously bottom feeder called for a trade, take profit target of 10,223 still on the table. We did not hit the stop loss for that. Just whiffed it. 90.40 just barely whiffed it here on the Bitstamp chart. Depending on the derivatives platform that you're on, it's possible that excessive wickage or excessive slippage would have caused that to exit the trade. All right. But that trade still is justifiably on the table. Could be a winner, could be a loser, but that trade still is on the table, justifying long exposure. And again, average entry on that of around 95.80. So it is what it is. Now, big credits to Alexander. He's had the CC account that is responsible for generating signals. Now, we don't provide hedge signals anymore due to multiple reasons. We've broken that down a lot to the premium members as to why we don't do that anymore, but we don't. But we still put the trades on our personal accounts. And Alexander has had the CC account hedged, as he correctly should have, since we initially dropped below the baseline. So again, overall USD value of the company portfolio being pretty well preserved here today. Now, let's see here. Peckham says long opened at 93.50, 100x leverage, 1170, no stop loss, underwater currently, liquidate me or nothing, poker game, hashtag bluff UCZ, hashtag puke or fly, man. Let's go. Sometimes you got to do that. Let's see here. Below the baseline, Wadatar explosion is signaling negative volume delta. Parallax is turning negative. Minx is flashing a sell signal. So I'm not going to lie. It is a possibility, right? It is a possibility that at the end of today's candle close, we will have a valid swing short signal, right? I'm not taking that off the table. I am wary of the ATR violation. I don't enter trades on days where we've had that excess volatility. I like those good casual re-entry or entries into trends. It's not flashing now because we've had a nice retrace of buying pressure off of the lows around 9,000. And if it's not flashing, I'll take the swing short signal, right or wrong, peak or fly, whatever. But that will be something to monitor. So again, it is going to be hard to get away from this. We have had overall range compression, and there is a valid way of looking at the market where we have, where we're just retesting support. I don't really feel that is the case from a technical perspective. We'll break that down here in a second as to why. We'll kind of bust out the trend lines and whatnot. But we certainly have broken the local range by breaking down below 9,500 and then breaking down below 9,300, which, if you'll recall, were two horizontal levels that I was watching for. Now, intraday, you had to have been fairly quick to catch this movement. Obviously, the best way to catch this would have been to take advantage of the wick to the upside yesterday. And I kind of broke down with the premium members when we were doing that community mentoring session how I did end up taking that short. So yesterday, yes, it was a joke, but following yesterday's stream, I did open up a short right after the stream, but I did close that out. So although I did have short exposure to this movement on my personal account, that was from a risk perspective, right? Because again, I am hedging against my bottom feeder trade, as well as the company account being hedged. So the way that actually ended up working out did make me money. However, I'm not boasting or bragging about it. It's not like a really an intentional trade that I put on for the purposes of making profit, right? It just happened to work out that way. Let's see here. And BTC vol. I talked about longing BTC vol. FTX move contract did end up being a pretty good play. Obviously, hedging that with the long call options was not the move here. Longing vol and buying puts was also a potential play, but that's a little bit more risk exposed. Typically, you would short vol and long calls is one potential way to do it. But anyways, there was a lot of decent option strategies. I actually talked to some of the guys who were a little bit more active on Deribit in the group, and they were talking about what they were doing with regards to that. But we're not here to really break that down. Anyways, so daily looking like we are going to be generating a swing short signal at today's daily close. If that does happen, let's look at potential profit targets for that. 8,800 price is moving fairly quickly, but 8,800, 8,300, and 7,800 roughly, give or take, with some deviation in there for the short entry. with what is, I think this is the default. So looking at an equity balance of about 5,000, we would be looking at a stop loss around $10,000 and a position size of roughly 1268. Now, again, you can scale that up, scale that down, adjust to your own risk as you so prefer. But again, that would be the correct position size if you want to lose 1%, 2% of your account should your stop loss be struck. All right. That's with a $5,000 account. Scale that up as necessary to your own needs and desires. Thanks for the sub, Jivan Kumar. Highly appreciate it. Now, just looking at the order book depth, we have beefed up around the buy side right here, but we'll get into that in a little bit more depth when we look at the lower time frame chart. So everything's fairly clear here on the daily. Things are looking pretty bearish, but of course, indicators are going to be looking pretty bearish after a long move into the downside. That's why we want multiple filters for confirmation. And we do have that confirmation. All right, let's look at the 4-hour time frame here, and let's get rid of this for just a little bit so we can see in a little bit more close detail. Yeah. So several levels. The $9,500 level, obviously we ended up breaking that fairly quickly. The $9,300 level, which was actually, if you guys will recall, the liquidation level for longs that we looked at. So 25x longs that were long from anywhere near the bottom of this range have been smoked now, which generally means, so 100x longs have been smoked, 50x longs have been smoked, 25x longs have been smoked, and we'll look at the liquidations here in a little bit. But that means that longs have pretty much been wiped off the map. So if you are wanting to counter trade this, if you are wanting to counter trade the kind of the overall movement, you're not misplaced to be looking for those opportunities now. And again, just generally where individuals are going to be setting their stop losses below highs and lows, individuals setting entries below highs and lows, we're pretty well served. And in fact, we can see that played out right here. We're looking at the ByBit chart. Same thing is true on the BitMEX chart. The same thing's true on the FTX chart. If we look at the previous kind of, you know, if you were looking around here, you're like, well, I'd be safe setting my stop loss here. No, you weren't. And you're not safe setting your stop loss here. In fact, you were safe setting your entry directly below, because if we can see, you can zoom in, price went just directly below that and bounced back up. About 2.67%. Not bad for a day's work. 4-hour Minx is extremely oversold, has not generated the buy signal yet because our noise line is lagging behind a little bit. However, I will point out that that is going to be a 4-hour bottom feeder trade. Looking down at the 45-minute time frame, we have generated a buy signal just now. Let's see here. Let's take a look. So we did see that price bounced off this point of control. This point of control stretched from the session of the 24th of May. Not as much volume as we saw from this initial rejection yesterday when we did have that. Sorry, this is the 2nd of June. Not as much as that initial rejection that we got when we touched 10,450 and we had that big loopy loop. We covered that earlier on in the week. Let's see here. Other interesting things. This is the level that Alex had marked and drawn out. We've seen price retest this. This is going to be 1, 2, 3, 4th test of this level of support. We've had more tests of the horizontal resistance as well, but again, pretty violent rejection. You know, kind of the main thing that we'd be looking for here is acceptance or immediate reversal. If you're wanting to trade discretionarily, if we do see acceptance below 9,300, that would tend to point more bearish. If we see rejection from price trading below 9,300 and we see price bid back up to 9,400, that would reflect a more bullish case. It just depends on whether we can get back to the point of control around 9,450, 9,500 and trade within that value area. Because currently, unfortunately, we have acceptance below 9,300. Let's see here. All right, we tagged that unfilled point of control. Today's point of control still remains. We see the high, so initiation of selling began at the 97.65 level. That's when the majority of short orders were placed on. Earlier in this morning, we saw $25 million sell orders absorbed by the books. Price only went down about 2%. People were calling it for that as a bullish case, but it was not to be because that was a telling sign, and we did end up seeing far more aggressive order flow come into the downside. However, I will say, as I've often said, although it is aggressive market selling that initiates price movement to the downside, it is the lack of resistance from buyers that really allows price to collapse like this. So yes, individuals certainly were market selling in high depth, and that was moving the markets. However, it's because buy walls were pulled, right? Those buy walls are there to absorb order flow, and those buy walls were pulled down to about $9,000. And this is a smart move again. Why would you buy at 9,800 when you know you can buy at 9,000, or you have the opportunity to buy at 9,000? Again, I saw some kind of interesting conspiracy. I think it's actually right over here. Yeah, this article, we can see here, right? So this is a tweet from Light Crypto over here. Market just absorbed $25 million sells on BitMEX, went down 2% without cascading. See you over the 10 handle. Just want to say a brief farewell to our friend Light Crypto. May he rest in peace. May his stop loss always be remembered in infamy. I need to get that In the Arms of the Angel song because I'm tired of singing it. Okay. But slippage as high as 85 basis points. Never seen anything like this before. So again, this is the $5 million sell orders. And again, generally we don't see whale activity like this with this massive amount of slippage, but this was quite different, right? This was quite different. This was aggressive order flow. Somebody with a lot of Bitcoin, with a lot of capital exiting the market very quickly. And we normally don't see this because, as he does accurately summarize in the rest of this article, slippage. Whales do not like slippage. And this is why we're going to see these large orders, these iceberg orders, if you will. But iceberg orders, again, are hidden orders in the order book that are not, available to see in the order book. They're expensive to place on too. If you've ever tried to use the hidden order feature in BitMEX, you pay a lot of fees for utilizing that feature to to obfuscate your order from the rest of the market. So as I explain it in my BitMEX 201 presentation in the course, they're expensive toys for big boys. Back to the market, back to the charts. A little positive, breaking back above that $9,300 level. As I said, if we see acceptance means buyers and sellers are willing to trade at these prices. That's not a good sign. Below 9,300, we can get that value area, the accepted value area, back above 300, closer to 9,500. That would point toward more bullish activity for me. All right, and again, the ISIS spot generating a buy signal right here just now. So let's follow that a little bit closely. S&P mini futures, of course, again, the entire market following down. Bitcoin is not unique in this. This is not a Bitcoin crash. This is a market crash, whether we're looking at the NQ or the ES or the Russell or the Dow futures. Gold and silver really are the only things up today. So unfortunately, not seeing that decoupling, not seeing Bitcoin trade like a risk-off asset or a hedging asset today as far as the open market goes, certainly on the OTC sector. Because we have seen more buy-side flow in OTC, and we can see this, right? Like, this is verifiably true, because you can look at the price of things like ETHE and GBDC, and you can see the premiums that investors are willing to pay for that. However, what that means, just so you guys understand this, is when you go to GBTC, when you go to Grayscale and purchase their trust shares, and so you're buying their offerings of Ethereum. They already have Ethereum and Bitcoin, and they are selling them to you for probably a markup over what they bought, because I'm sure they're doing FIFO, right? First in, first out. So that means that, Grayscale has been buying Bitcoin from, 9,000 to 3,000, and they are selling those shares to you at a fairly high premium as well. So although we're seeing a lot of demand from institutional investors, and although we're seeing a lot of demand from high net worth individuals, that isn't directly translating to the price of Bitcoin, because all of this is occurring over the counter. This is occurring on the OTC markets, which does not directly affect price in the short term. In the long run, it does, because eventually those individuals run out of Bitcoin and they're forced to go back and restock their supplies. And again, we see this because Grayscale does do regular buys. Heck, they've bought could be wrong about this, but I believe it's like $1.3 billion worth of Bitcoin this year. They certainly have gobbled up more Bitcoin than has been mined in 2020. Meaning, from a very realistic from a very realistic sense, current demand for Bitcoin at these price levels is outpacing supply. Again, the fundamentals point to quite a bullish future for Bitcoin. So keep that in mind. Let's see here. On the CME futures, we ended up breaking down below our recent recent range support. Again, more fundamental, potentially more valid levels would be at the 86.80 level, which I can certainly concur and agree with. And again, getting down here to the 5-minute chart, we can see, again, pretty aggressive sell flow coming in right now, as well as negative predicted funding coming in on Bitcoin. This is the BitMEX perpetual inverse contract, and this does not bode well for bears opening up shorts at these price levels, which is why I said at the very beginning of this, I prefaced this with saying, if you just put on a short, back away. Back away, sweet Susie. All right, let's do a general market breakdown here. Market summary. Let's look at our indices. All right, as we move forward, the S&P 500 index down 143 points. The Nasdaq down 371. The Dow down 1430. So again, pretty significant gains. These are greater than when I began preparing for today's show. Everything was down about 2%. That's doubled, right? So we've seen some pretty impressive sell flow across the entire market, right? Indices down, futures down, commodities down, crypto down, doesn't matter. The only thing that's really up is gold and silver. And the Dixie, right? The dollar index rising, which is pretty natural. The DAX down 4.47%. The FTSE down 4% today. The Nikkei is down 2.82%. But again, of course, the biggest loser is going to be the Dow Jones Industrial Average. Sorry. And we see the Dixie is actually continuing to soar. So when I, again, began preparing today's video, this was up 0.21%. Decent. But now it's up half a percent. So 49 basis points, which is a pretty decent move from the Dixie. The euro dollar having a negative day, the dollar yen having a negative day, the pound dollar having a negative day, the Aussie dollar having a negative day, the dollar Canadian up, right? So we are seeing strength against pairs trading against the dollar trading against other pairs, and anything trading against the dollar is pretty much down, except for the... No, that's not true. We see your gold futures up 20.5 points. Silver up almost 1%. Silver is actually getting sold off just a little bit because it was up more. Gold is getting sold off a little bit here actually because it was up more. Crude oil was down as low as 9% the last time I checked. Natural gas was down but now is up a little bit. Cotton futures staying fairly stable. So shout out to Philly over there in Manchester and Cottonopolis. And of course we see Bitcoin futures down currently 6.24% on the CME futures. And of course, pretty bloodbathy day for cryptocurrency here, but Bitcoin holding its own, not down. I mean, I would say Bitcoin here doing the best at holding its value relative to everything else. XRP down more, Ethereum down more, Bitcoin Cash down the most. Actually, EOS down the most now. Bitcoin Cash and EOS were tied neck and neck for biggest loser of today. Litecoin down fairly negatively as well. And more concerning, yields on bonds down as well today. So pretty negative day for the rest of the market. All right, let's get into our alternative setup over here. So we've been sharing this. This is something that you guys can utilize at home if you want. Most of these indicators. And what do we see coming in from here? All right. Well, time transformation based on the Fisher transform is giving us a cross under. So that's going to be a momentum oscillator. If we're using this as a line cross initiator, meaning we're looking at this indicator to initiate trades, when it crosses over, we trade in the direction of the cross. This would be signaling for a short. True strength index, which is one of the best out of the box indicators I've ever used, right? If you want a good indicator on your chart and you're willing to trade longer swings, you cannot go wrong with the true strength index, in my opinion. TSI has been crossed negatively since the second week of May and remains so. We were slightly hopeful that we were looking for an up cross here as we begin to trend to the upside, but today's negative movement has taken that off the table. And again, decent volume on today's sell-off as well, or about 1.5% times the moving average, the volume moving average that we've had over the past 15 days. Looking at dynamic money flow, we certainly are tailored down, fairly large drop. Let's see here. I won't bore you with the math. Oh, come on now. You're not going to do the measurement for me? Anyways, down about 50% on the dynamic money flow index. This is based off the money flow index, the MFI, and this measures whether money is flowing into or out of the markets, right? Accumulation distribution is a similar indicator that can be utilized for this. On balance volume is a similar indicator that can be utilized for this. Personally, I like the money flow index, and this is one of my favorite versions of it so far, dynamic money flow. This is still in the positive though. So overall, the trend is to the upside. If we use this as a centered oscillator is above the zero line, this is not calling for shorts at this level. However, let's do a little back testing on this. Let's go back in time and we can see that throughout this entire market cycle, since we broke above the 26 period Donchian here, this has been positive. Also, roughly when we broke above the Hall moving average 60 for the first time following the March meltdown was quite positive. So again, no shorts in this level. However, we do see that utilizing the money flow index, at least on the daily with the default settings, it's not the quickest to catch shorts. And this is good. We want it to filter out fake outs. We want it to filter out fake outs. This is very important. So it actually goes negative. If we look at the last significant sell-off here from Bitcoin that occurred really from the end of February to the middle of March, we started trending downwards, culminating in that March meltdown, very negative candle, where we did see prices as low as 3,900 on certain exchanges. We can see the dynamic money flow did go negative on the 8th of March. So although you did miss this initial foray into attempting to short the market and you did not short from the 10,000 level, you would not have been shorting until the $8,000 level. It did get you in for the most significant move to the downside. Again, you missed the first 20% move, but you caught the last 45% move. So kudos on that. Let's see here. Dynamic money flow positive throughout here. Dynamic money flow goes negative. Let's talk about that Jericho candle that we had back in October of 2019. This screwed a lot of traders up, where we did sink all the way down to about the $7,300 range and then mooned all the way up to 10,400 over the course of 2 days. And then listed lazily sideways for a while and then began a pretty epic sell-off. Money flow went negative on the 8th of November, right as we crossed under the baseline. We do have a little bit of a chop candle there, and then it's just pretty much nothing but downside. So good on that. And then we're pretty much negative all the way through September into October as well. In fact, we do briefly dip back above up in this area, potentially getting trapped in a long. I think most likely just about anybody would have taken a long around here and punted for it. That would have been a losing trade, but you would have caught this winning short and this winning short in pretty short order. This area of the market was pretty tough to get a good trending trade on, roughly kind of mirroring what we've seen in Bitcoin over the last few months. Obviously, trending traders not having a lot of success, and that's okay, right? Because we have success here and here and here and here and here and here. And we're not, our systems aren't really designed to catch these areas. But however, I will point back out, I did have a successful swing trade here to here, and here to here, and continuation here to here. And that's about it. And I got a little chopped up right around here, but I don't recall myself actually taking too many active trades here. And then I was short on this movement to the downside. So again, overall, if you take a step back and you're not pushing yourself for trades and you have good filters and you've taken the time and the patience, particularly as we teach in the Pathways to Profit course, to build a good system and build efficient filters that backtest good, and you manage your risk and you're not thirsty for a trade, it's okay. All right. So this would not be, as I said, so I kind of said all that to say that based on that, this volume indicator would certainly not be signaling for a short yet at these levels. Now, let's take a look. This is going to be painful. Gird your loins. I told you. Hurts, doesn't it? Where do we start? All right, so VeChain, which I know Alex has us in, and Digibyte, which I know Alex has us in, are popping today. Horizon, which is a privacy coin, is doing fairly well also. Everything else is down, right? One exception I see in there, SNX. But let's see here. Kyber Network, which was a big mover, down 10% today. Lend, Ave, other huge performer of the last month, down 10%. Steam, may it rest in peace, down 10. Omisa Go, which has been doing well today, down about 6%. Alex says, actually, we're not in Digibyte. Just a second. Yep. Take them out. Okay, thank you. Loopring, again, another huge DeFi mover of the last month, down 8.2%. But again, nothing really special there. Everything else down fairly negatively today. Electroneum, EOS. Electroneum's a scam coin. Don't mess with Electroneum. Zem, ONT Ontology, Neo, Verge, Komodo. I mean, you just throw a dart at the board. And you could you're gonna hit a loser. Basic attention token, 0x, TRX, Holochain, Monero. Having said that, we do know that Coinbase is looking to list potentially 18 coins in the next few weeks, which is why we did see some nice pumps. VeChain and Digibyte and Zen among them, I do believe. So the kind of FOMO pumps on those continue. And I'm not sure what I do see here a comment from Captain Crypto. He says Augur is getting listed on Binance US tomorrow. Sweet. Unfortunately, I don't think that's going to do anything. Binance US is still but hey, maybe it will. Maybe it will. Full respect to Catherine Coley. She's a pretty cool girl, but Binance US is not really having the effect that it would like to on the markets. All right, let's take a look at our majors on ByBit. Ethereum certainly generating a no trade candle today for ATR violation, unsafe to trade due to current volatility. We are also above the baseline. So this is actually a pretty beautiful reversal baseline bounce here for Ethereum, targeting about 250. So that's a pretty big swing move. But after that sell-off, if you were looking for an area to long before we slip below the baseline and you're not looking for longs anymore, here's your shot. I'm actually... Yeah, don't kiss, don't tell. EOS is negative here. However, dynamic money flow is going to be keeping us in the positive, not looking for active shorts at this point in time. And again, overall, fairly choppy. Movement back down to the lows. We have seen 238 basically support current price action on the last few sell-offs for EOS. And although this one certainly does look more negative with the compression and the failure to achieve the lower high, not calling for that absolute death short yet. XRP USD, however, dump it. No, listen, okay, I know there's XRP fans over here. Listen, Dynamic Money Flow saying the exact same thing. We do see that same level here on XRP, about 18 cents supporting price, and we are currently trading at about 19. So we're not out of the woods yet. We can still see XRP pump. And just to make it clear, I'm not calling for epic reversal trades on everything, right? I'm not this hyperbull that's saying, oh, it's a dip, buy everything. We could significantly see a short price depreciation trend here, right? Now, moving forward, I am quite bullish on Bitcoin over the next 6, 12, 24 months. However, there's always room in there for a good 20 or 30% pullback. So don't just calm down. All right, so that's the major cryptos. We went over all of that. Obviously, the alt BTC pairs are taking a hit. Alt USD pairs are taking a hit, being pulled back down with the rest of the market. I would be far more risk averse for the alt USD, or excuse me, I'd be far more risk averse, approaching the alt BTC pairs than the alt USD pairs. However, again, positions are doing well. I feel like today is going to be a day of reckoning, though. Overall, we're going to have to be closing out a lot of trades, many in profit, some in not, and we'll balance the books. But overall, looking at the big gainers, I find it very hard. Again, I already know from looking at the P&L of active trades this morning of what we have going on that our recommendations have been very, very good. Pretty happy for the premium members. And unfortunately, we're going to have to end up taking profit and closing trades out on a day like today, which is going to exacerbate some of the losers and pull back some of the winners. But the P&L overall net is going to end in the positive in quite a good way. All right, let's take a closer look at our indices here. Let's actually look at the SPX. We'll start looking at the actual indices themselves. All right. We're going to have to look at the SPY to get a good look on the money flow index. But again, as I told you guys, I exited my SPY trades. SPY flashed an exit signal on time transformation just 2 days ago. We see True Strength Index pulling back down to the signal line now, which potentially is going to be generating swing shorts, short swing trades for the S&P 500 index, which is going to bode very, very negatively for individual stocks in that sector, massive growth stocks and large companies. It's also going to it's going to be the kind of knell for the overall market. Now, this isn't confirmed yet. If you look, we haven't confirmed a close below the baseline. We also have not confirmed a close below the TSI trigger line here. And let's take a closer look at the SPY so that we can actually look at dynamic money flow. And we can see that dynamic money flow here is still positive, right? It's going to take some time to generate that short swing. So patience here is certainly key. Big shout outs to those who maybe took a reversal trade. Actually, I don't want to give you shout outs because that's going to be incentivizing poor behavior moving forward. And I'm a trend following trader. And I think reversal trading is fraught with flaws. However, having said that, definitely a good exit warning from the time transformation, and very, very glad to see that. Very, very glad to see that, because again, you guys have to realize as you move forward with a more professional approach to trading that the potential gain is generally not worth the potential drawdown. And I've been concerned and talking about the froth in traditional markets for this entire week. Monday's episode was titled "Who Ordered Some Froth?" as the NASDAQ hit 10,000 yesterday. Yeah, just not a good time. Just not a good time to be going long. All right. Let's look at our cues today. Looking at the NASDAQ ETF actually generating the exit signal today. Now, it would have been a good harbinger if you would have watched the charts and known, obviously, that the Dow and the SPY tend to move in lockstep with the NASDAQ, although the NASDAQ was diverging and putting in positive movements on days when the SPY and the Dow were already putting in their first signs of hitting the wall and generating their exit signals. For that very reason, I did not take any long exposure on the NASDAQ or to the traditional markets in general, except for a commodity trade. So I was in DBA. That is not doing too hot today. Ended up pulling back. Palladium didn't do fantastic for me either. That's okay. I've had a good running win with ETFs. 2 losing trades does not really butter my biscuit too badly. All right. But yeah, NASDAQ generating the exit signal today. However, same here. Still above the baseline, still above the signal line on the True Strength Index, and not pulling down below the zero line. So indications here that we actually shouldn't be looking for active shorts at this level, and that we might have some continuation, but we don't have any signal to do that yet at this point in time, certainly. And of course, looking at the DIA, looking at the Dow Jones Industrial, looking very similar to the SPY here after a few days of pullback. Again, a very negative gap to the downside, high volume on this sell-off. Looking to approach the baseline. We are in that Keltner channel, so that's a no trade zone. But we can see here that maybe one more sell-off, and on the Dow, we're going to be having that negative money flow, which is going to it's going to be triggering shorts for a lot of options for me. For individual stocks, obviously, you can target your large industrial markets, and you can use that as a harbinger for the rest of the market, in my opinion. And as we talked about, longing VIX certainly was the move to take. Not a trade that I took, wasn't above the baseline, but if we look at VIX now, this is a pretty beautiful signal. Not actually generating a long signal per this system, but we did mention, obviously you guys watch the show every single day. I've been talking about potential longing VIX for the last week, saying it's not, it's a potential move, not something that I'm going to do. Same thing with Bitcoin. I talked about the option split, the straddled call with shorting move. Alternatively, longing with puts. That's a little bit more risky, but that would have been a banger trade. Longing volatility and having puts. Oh man, you'd have made so much money today. All right, let's take a look at the commodities sector. I kind of want to put my eyes on USO. USO having a pretty significant gap to the downside today after generating that exit signal. So again, just a beautiful warning sign from time transformation, getting us out of the market, if we were in it, very safely and securely. Again, one of our more popular premium indicators here. Dynamic money flow has turned negative again. True Strength Index still signaling positively, but pulling back down and angling to the downside, but not below the baseline. So really nothing here to do with USO. Basically pulling back down to current supports, a little bit above it. I do see some liquidity available in the 24 to 2350 area. We'll just kind of play that one by ear. Nothing on the table for me right now. DBA obviously having a down movement today with the rest of the markets. And Let's take a look here. Obviously, palladium as well, same thing. Did end up getting that negative follow through yesterday following the rest of the market. So not moving with gold and silver, but acting more as a risk on asset, as palladium and platinum are somewhat want to do. SGOL, after an initial gap to the upside, the ETF is selling off. GLD, very same thing. After an initial foray to the upside, we opened negative, we traded up, and we are selling back down with the rest of the market now, unfortunately. So the ETF, gold, and silver just not able to keep up with the actual futures, the contracts for difference futures. Let's take a look at Hecla Mining for fun. Let's look at a moonshot stock. Hecla Mining down 9% back down to the baseline. And of course, True Strength Index signaling negative. Gareth Mensa from Zilliqua. What's going on? We got the Zilliqua evangelist in the house today. Good to see you, my friend. Thank you so much for the sub on YouTube. It's good to meet you in San Francisco, my friend. Hopefully you're doing well. Crypto Rick says, hey, Justin, is there an easy way to backtest an EMA or moving average baseline? Certainly. So first off, there's two main ways to do this. Well, there's a bunch of ways to do it, but I'll break down the ways that I teach how to do it, right? And I go into a lot of detail in the course. So the first thing you're going to need for the kind of main method, the main kind of concept that we teach in Pathways to Profit, is you're going to need some objective value to indicate where your take profit target is, so you can test a consistent take profit level. We use volatility for that, and that allows, so for every single trade, like my take profit is going to be this far away. And when we cross the baseline, do we on average hit that, or do we on average not? And you can keep track of this with a notepad, right? Just X, 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 and just calculate your winners and losers. Or you can create a very complicated spreadsheet like the ones that we provide for our traders. Secondly, the other way that you can do it is, the other way that you can trade it certainly is by measuring your max run up. So when you cross above your baseline, measure your max run up from close to high, and measure your max drawdown, right? From open to low, right? And then I would put on there, what I typically measure is like chop. So this is in conjunction with your kind of objective take profit level, where, okay, well, on the events that I didn't reach my take profit level, how much was my drawdown? How much would I have actually lost before I switched directions the other way and got in on a profitable trade? So you can do that with a static position size. This is the easiest way to do it, with pen and paper or with a spreadsheet. You can do static position sizing, meaning you're using the same position size for each trade, and therefore it's very easy to calculate your P&L. You can use a position size calculator, which makes it a little bit more complicated because that means you're going to have a different value for each trade. But if you're using one single position size, one static position size, then it's fairly easy to measure, right? Because if let's say you're trading with 10,000 contracts per trade, then 2% is always going to be the same number, right? 5% is always going to be the same number. 10% always going to be $1,000. So fairly easy to do. But that's the best way to do it. Measuring your max drawdown, your max run up, and then measuring obviously your percent profitability and profit factor. Yeah, Bird makes a good point. Why not the TradingView strategy tester, assuming one knows PineScript? That's a big assumption, right? And PineScript isn't hard to learn, but it is hard to write strategies correctly, in my opinion. We focus on that a lot in the course, and we're pretty active in strategy development in Pine now, as well as indicator development. And yeah, we certainly do. We teach people how to do that in the course, the correct way, in my opinion. And it is certainly one thing that you can do. Testing a moving average baseline strategy wouldn't be too difficult. But again, getting that position sizing right in cryptocurrency is not super easy. It's not super easy. But yeah, it's certainly something you can do. You can get rough figures on how well something performs, which will give you a good boost moving forward. So yeah, if you want to go down the Pine route, which is typically how I do things nowadays, that's certainly something to do. All right, so we looked at commodities. Nothing really here that stands out to me that I'm really interested in here in commodities plays, as far as I'm concerned. Again, pretty risk averse, and will continue to be. Indices as well. Foreign currency markets are screaming today. Big pullbacks on the Australian pairs. We see the Aussie yen pulling back down to the 26 period Donchian. No plays below potentially 72.854. Otherwise, I'd be looking for upside potentially, but not looking for an active trade at this point in time. Aussie Kiwi. I am short on the Aussie Kiwi, generating good gains, down trading at about 1.6595 currently, looking for further sweeps down to 1.06, 1.55. The Aussie Canadian chopping following a take profit signal 2 days ago on long swings. No play here. I would be looking for long continuation if we can hold above that 26 period Donchian. The same with the Australian dollar here. No plays to the short side. No plays to the short side above 0.675. But while I'm not looking for active continuation at this time, I think that we can still pull back closer to that 0.6777 level. The trades I would be looking for would be to the upside here. Canadian Swissy, massive movement to the downside on the CAD Swissy here today. Really not a no trade signal, but certainly below the qualifying line today. So this is going to be a pretty risk averse trade for me, especially with that volatility coming to the downside. Big volume on this trade. If you caught it, great. Maybe on that potential swing below the baseline yesterday, if you're not using the Keltner channel. For me, we are pretty far extended looking for a short entry today. Look for entries closer. Look for entries closer and potentially above 0.697 to be looking for short initiations on the CAD Swissy, but I would certainly be looking for downside. Canadian yen is going to be potentially generating a short today. Do need dynamic money flow to move down a little bit utilizing this system. And I would actually, you know what? True strength's not going to cross under. So potentially, if we kind of correlate that with CAD Swissy just being a little too overextended, the CAD yen's just not ripe enough yet. Unfortunately, it might mean that we miss it, but it's just not there for us right now. Swissy yen, no play on the table. I would be looking for upside if we can get a time transformation cross up. No short plays above 112.128. George Kite, thanks for the sub over on YouTube there, my friend. The Euro Aussie. The Euro Aussie. Euro pairs putting in decent gains today. The Euro Aussie breaking above the 26 period Donchian and things beginning to look positive on the indicators. Money flow is not quite there yet, but again, long plays are going to be valid above 1.648. So be watching the charts for the Euro Aussie. Not there quite yet for me yet. The Euro Canadian putting in really good gains today, right? And if we can get a decent pullback below 1.536, I will be looking to take the Euro CAD long, actually. Euro Swissy is on my watch list for a short today. It's really the only Euro pair that I'm going to be contemplating looking for a short because the Swiss franc is getting bid up today as a safe haven currency. What I would really like to see is price settle at the close closer to 1.066. Currently, we're trading at 1.0662. I'd like to see that a little bit higher, the highest as I could possibly get at the tippiest, most bombastic entry that I could get on this. But yes, Euro Swissy is on my watch list for a short play today. Euro Kiwi, nothing going on here on the Euro Kiwi. I would actually be biased to look to the downside for this trade. We do see things start to turn to the upside yet, but no confirmation. So for that reason, I'm going to avoid the Euro Kiwi. The Euro Pound, unfortunately, not doing too well for me today. We are going to be closing this trade out today. Again, we are seeing Euro pairs getting bid up and against the pound as the pound kind of slips because they're not taking COVID too well over there. The Euro Yen. Selling off. So the Euro Swissy, the Euro is not bidding well against safe haven assets like the Swissy or against the yen today, although the dollar is performing better against the yen than one would anticipate. And the Euro dollar generating another take profit signal, another exit signal, the Euro trading against the dollar here today. So again, pullbacks closer to 1.112 are potentially in order. So I would not be looking for active longs on this until we pull down a little bit. All right, pound Kiwi generated a take profit signal 2 days ago on active swing shorts. So I would not be looking for any plays on the pound Kiwi today. Looking for plays closer to 1.966 if we're looking for short initiation. Pound Canadian is going to be potentially on the table for long swings. Not today. Need a little bit more confirmation. I'll be double checking at daily close. And we are a little overbought on time transformation. I'm not going to lie. So I want to kind of see this reset, but the pound CAD looking like potentially a risk on play. Pound Swissy, again, not doing well against safe haven assets. So bidding down against the Swissy today is the British pound. No entries today, far overextended below the qualifying line. So kind of very similar to that CAD Swissy that I was looking at. Really need price to bid back up above 1.189 before I even consider this one, as we are currently trading at 1.187. Excuse me. The pound yen, not in play. Not in play, but certainly looks more attractive than something like the pound Swissy. Pound dollar, generating a take profit signal today. Wish we could have gotten it yesterday, but again, we were just bidding up, very similar to the NASDAQ. We were bidding up on a day when, prior to a big market correction to the downside, which means we're going to get the exit signal on a fairly significant correction. So the pound dollar is not in play. Needed to come down below 1.259 before I consider continuation longs. Pound Aussie, again, generated a take profit signal on short swings 2 days ago, and then 2 days prior to that, so certainly getting you out at the bottom, was the pound against the Aussie. No plays. For short continuation, I need to see price actually, kind of roughly where it's at. So just watching for continuation now. Kiwi dollar generated a take profit signal 2 days ago from the time transformation indicator. No short plays above 0.629. Would like to see price come down to 0.638 for some long continuations. Same for the Kiwi CAD, generated a take profit signal 2 days ago. The trade would be to the upside, but I'd like to see it below 0.867. Kiwi Swissy, no play, reversal baseline bounce potentially. Kiwi Yen, again, getting into the entry qualifier area, so into the area where continuation longs begin to look attractive. But we need to see some long continuation here. We need to see an actual objective signal. Again, now we're getting into dollar pairs. We're going to see some big candles over here today. The dollar Canadian generated a take profit signal on swing shorts 2 days ago, which would have saved you from giving back all this profit as we are now bidding up above the qualifying level. This puts us into an area where we could look for continuation shorts, but we need to see the initiation, so nothing today. Dollar Swissy, actually, though, there's not much to say here. The dollar Swissy has been in a downtrend. Certainly the Swissy is getting bid up against the dollar, but putting in a doji on the daily, not a lot of volume. I would be inclined to say that this actually begins to list upwards over the next few days, but it's going to depend on that dollar trend. And again, the yen, dollar not doing well against the yen, bidding down. Active short continuation would have been valid 2 days ago. TSI was a little too slow to catch this, so let's catch a short initiation if we bid back up above 107.42. The Aussie Swissy is going to be in play today for a potential short, which is going to be the only Australian pair that might be generating a short, but again, bidding against the Swiss franc, which is a more safe haven asset. So, and the dollar won has not actually generated a proper take profit signal. But again, I was wary about this over the last 2 days. I have mentioned the dollar UN because we are getting that crossing and coiling behavior in oversold territory. So I would be out of this swing short, certainly, because we do see things starting to list back up to the upside here in oversold territory. So while we might get short continuation, I would not be actively shorting at these levels. Dinesh, thank you so much for the sub over there on YouTube. All right, moving to our precious metals today. Gold is actually looking pretty good. Now, TSI has not crossed above, and we are in the entry qualifying area. I think if you want to be risky, you could look for gold longs here. I think the futures did perform well today, and I think that we're going to continue to see positive appreciation here on gold. Out of this range, we are conforming to a lower high pattern here, bashing up against horizontal and diagonal resistance here and rejecting, but holding above the baseline. So long plays on gold are going to be okay above 1712, getting back down below 1712, we begin to look for continuation shorts yet once again. But of course, money flow is very positive here. We see TSI curling back to the upside and time transformation indicating potential upside. Palladium, don't want to talk about it. But of course, let's objectively view palladium. I attempted a long on palladium, which has been unsuccessful as of yet. TSI is curling back down to the signal line. We see them begin to flatline, which often indicates consolidation. Of course, we've seen consolidation on palladium for a while now. Time transformation is crossing back under. Dynamic money flow remains positive. So no, and again, very little volume actually on palladium today. So certainly no initiations into short trades here. If I wanted to be cheeky, I would hold this open in hopes of recovery. It's not really my strategy. It's going to depend on what the indicators say at the end of the close, looking like a closed exit and drawdown today. Silver, no play, unfortunately, looking at the CFDs. Now we are relatively close to the baseline. We do have TSI crossing under, unfortunately, which is going to be hinting at further downside. No short plays until we close below 1711 on silver. But if we can get down below 1762 and get that to reverse, we could be playing to the upside here again on silver. But so far, just flat, stacking physical. Platinum hinting at some downside here. Dynamic money flow is still positive, but Nothing really to do here in my estimation. We just don't have the money flow confirmation. Bentley crude. All right. So here's the oil CFD for Brent crude, although as I like to refer it, Bentley crude. Gave the exit signal 3 days ago, right at the top. You're welcome, utilizers of time transformation. Nothing to do. No plays short on. No short plays on Brent above 35.92. Corn reversing, nice, beautiful reversal baseline bounce opportunity there as DMF continues to point up and TSI continues to ascend, waiting for that crossover from TT for a continuation long. Natural gas pushing to the upside, no plays. Soybean, no plays. Exit signal 2 days ago. Sugar generating an exit signal today. West Texas, exit signal today. You're welcome. Wheat continues to be, actually, probably flipping, hasn't yet. I'm sorry. Wheat has not flipped into a short play yet. Not yet. And of course, what do you guys want? The Aussie, the China, the Euro, the France, the Deutsch, the Hong Kong, the India, the Nikkei, the Netherlands, the Singapore 30, the Taiwan Twix, all very, 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 very negative. And our CFDs on American indices, the NASDAQ 1000 generating the exit signal today. We had the US 2000 generate that exit signal 2 days ago. Thank you so much. No short plays here. No short plays, actually. The SPX 500 CFD generated that exit signal 2 days ago. No short plays here, though. No short plays here. Just pull her on back. So. All right. So let me think here. Hold on a second. I just saw somebody hop in here. All right. Nothing. So that's a lot. Okay. So in summation, no swing shorts as long as we are generating this no trade signal. We looked at potential downside, all the way starting at the $8,700 level, all the way down to the $7,800 level. If we are to break to the downside on that on this particular swing trade, I would like to see, based on this, let's bring up the entry qualifier. I would like to see, based on this, price above 93.48, which is where we're at. We are above the entry qualifier. Entry qualifier sitting at 93.48. So technically we are not out of our league to be looking for swing shorts between 93.48 and 98.42, which is going to be the gap, the ABS, between the qualifier and the baseline here. Gives us a more safer, secure entry, but it's going to depend on daily candle close. We see that the volatility, the range from open to close is higher than average ATR currently right now, utilizing default settings of ATR, and that generates a no trade signal for me. Just too volatile of an area to enter, and too much whipsaw can generally happen. The regular account is hedged, as it should be, below the baseline. And yeah, actually things are relatively good. I don't honestly see too much opportunity in the market right now. I think that aggressive shorts are being a little early. I think that honestly right now is the time where we're going to see, this is the time typically where we see reversal traders begin to take profits and traders who are late to the trend begin to put in massive shorts at current price levels, which I do not think is the correct play. I think that that is early. I think that we want confirmation. Our volume indicators would tend to imply that. We do not have rising explosion level, for example. And we also do not have negative money flow. And ultimately, if you want to look for, oh, thank you so much for enabling Adobe Acrobat. And ultimately, things that we can watch intraday, all right, is continued acceptance above 9,300. Bidding back up to 9,500 would be very good to see here in my estimation. Playing this current ISIS bot long, which would have been triggered auto-magically. Why is this? Why is that a thing? And as far as, traditional markets, I'm still not really interested in entering into this froth, right? Much gnashing of teeth does not comprise with my trading strategy. I don't need the headache. I don't need the hassle. I don't need the losses. And neither do you guys. Let's look at, let's look at the 45. Let's see here. We don't see too much, there is, retail is beginning to aggressively short at these levels, but we're not at that OMG's back the truck up with the negative backwardation, on Bitcoin's derivative price at negative 0.12. That's the level that I tend to watch for. Although negative 0.05 can often be a sign of short-term recovery. Continue to see the divergence, continue to see the alt BTC pairs bid off. So overall, here's my suggestion to you individuals. If I can proffer one. I think that we're a little too early to say that this is a reversal in equities markets. It tends to look like that, but I don't want to be the guy that's always jumping at it. I would like to see a few more days of confirmation. I'd like to see how the market ends up bidding up or bidding down come Monday. Friday, this is Thursday, right? So we can move into an unfortunate Friday as well. It's possible that the selling trend is not over. We're seeing some bidding forces come in. We're going to see how the market ends up closing. There's often, obviously, the most volume in the last hour of the traditional markets and the first hour of the traditional markets, and we can see Bitcoin comprise that as well. I would largely argue that most of the fireworks are over for today, but of course we can see an increase of volatility certainly come in and step in. Bidders certainly have stepped in over the last hour. We can see from tensor charts just on BTC USDT, we see 3.7 thousand buy orders, 4.1 thousand. If we look at big orders here, the last big swing that we see over the last 20 minutes were sell side orders, but not big old orders, in my opinion. Did not see a massive wall of aggressive market buying, just typical absorption of sell side flow from limit orders. So again, 9,000 was a well-positioned area to have your limit bid stacked, and we'll see if that holds, right? So we have position longs at 9,000. That's the level that they're going to hold. That's the level that they need to hold, right? So kind of the next, following a volatile movement, right? I would love to say that I think that we're just going to continue getting some sort of volatility. Unfortunately, what we move into now is price discovery. We see if buyers can hold their $9,000 price buy-in, and if we can get value, if we can get acceptance back above 9,300, or if we're just going to, or if sellers are going to continue to chip away down below. Of course, we've got some fundamental stuff here to look at. So let's kind of jump into that now that we've broken down all of the markets. All right, we went over slippage, blah. This is a pretty good article on Ethereum, the ETHE premium coming from Grayscale and Grayscale Trust. So this article starts off with, pointing out that spot exchanges have been suffering. We've covered, obviously, earlier in the week, the fact that cryptocurrency spot exchanges were experiencing their lowest deposits in over a year because we're seeing increased outflow, meaning fundamentally that Bitcoin investors are withdrawing their funds from exchanges and putting them into cold storage for the purposes of holding them for a long time. So they don't have intentions of selling right now. This is very bullish, fundamentally, positively. It also does indicate increased alt Bitcoin speculation, right, over the last few months, because we have seen that trend exacerbate. Now, that's an exacerbation of a trend. That's not the justification for the trend. That's just an exacerbation of the trend. The real reason, the bigger reason, is individuals moving their funds off of exchanges to hold them for the long term. All right. All right. So at the time that this was written, the market price per share of ETHE, which is Grayscale's Ethereum Trust, was about $218 per share. Ethereum holdings per share were estimated to be a mere $23, meaning that you get, for $218, you get $23 worth of Ethereum. Why would you do that? Institutional investors are buying these up so that they can cash in on the premium, obviously, on the secondary markets, but secondly, so that they don't have to deal with custody issues, and because they don't want to deal with actually holding the underlying cryptocurrency. They could lose it. They could screw it up. They don't want to deal with that. Now, some institutional investors do. We don't see all going this way, but certainly we see a large trend of institutional investors buying the heck out of whatever Grayscale wants to sell. All right. ETHE market price is up 743% since the start of 2020. So again, a shout out to some of the guys in the group I know who have been speculating hard on ETHE. Shout out to you guys. You guys have done very, very well. Obviously, there's an increased demand for Ethereum due to Ethereum 2.0 coming out in the near future. And with ETHE shares trading effectively for the same price as Ethereum, this meant that investors were buying exposure to the cryptocurrency at an implied price of approximately $2,500. I have seen some analysis that purports to show that this is the reason why that Ethereum should be fairly priced at $2,500. While Ethereum certainly could reach $2,500, I think that is a hope beyond hope. That is some direct correlation because institutional investors are willing to pay this premium. That is playing with mathematics, right? Like, well, if we divide this number by this number, we get this number. Certainly we'll get there. No. We can see that 88% of institutional investors in 2020 have been, the first quarter of 2020, have been the investors in the Grayscale product, the ETHE, have been institutional investors as opposed to accredited retirement accounts and family offices. All right, and here we go. So this is a pretty good breakdown right here. I'll just quote this article. Even though ETHE trades on the secondary markets, the market shares themselves are minted via a private placement process that only involves accredited investors. So this is, very similar to how ETFs shares are created in the first place by an authorized account, by an authorized user, by an authorized person, whatever you want to call it. Brokers basically just print them out of air to be able to meet liquidity, and they have the right to do that because they have a contract with the issuer. Now, institutions can be accredited investors as well, and they can buy ETHE shares for the same valuation as the spot prices. However, to do so, they need to lock their shares up for a period of 1 year. So, institutional investors, not just accredited investors, can now create, essentially ETHE shares. So they're going to be able to purchase at a fairly significant premium, at a reduced premium than what the market price currently is right now. $75 million is going to be unlocked by the end of October. Figure that will be close to $100 million by 2020. And holders will have the option to liquidate those shares on the secondary market for a profit on the premium. So, I guess the profit motivation here would be similar to an options contract. But again, just gleaning this, this means, and we've kind of seen this, right? We've kind of seen this before. I would like to see some correlation. Maybe I'll chart this myself between investor lockups, investor 1 year lockup periods becoming available, which I believe happens every quarter for GBTC and ETHE, and the movements in the market. But again, remember, there is going to be a delay because the shares are sold on the secondary markets. That does not directly affect the price of Bitcoin except via speculation. And OTC purchasing and selling does not directly affect the price of Bitcoin right now. It affects it over time, right? And overall, we do know this. OTC demand is higher than supply right now. There is more demand than Bitcoin that is being produced. So the fundamentals, even the on-chain fundamentals, are very, very bullish for Bitcoin moving forward right now. The only thing that could reverse this is if we see, a massive panic from miners, if we see a massive panic from hodlers, and we begin to see large amounts of selling at these price levels. So keep that in mind. All right, now let's cover this. Let's cover the FUD of the day. Might be true FUD. Bitcoin miners' bank cards frozen by Chinese authorities in Sichuan. There are fears of bulk bank cards freezing that has affected the operation of Bitcoin and crypto miners in the Chinese province of Sichuan, according to local media reports. Now, as you guys may or may not know, I've covered it certainly a lot. The Sichuan district in China has the highest concentration of Bitcoin mining, right, in the world. And this is due to very, very cheap hydroelectric power, not because the Chinese have an evil conspiracy plot to rule the Bitcoin blockchain. No. Reports show that several crypto mining and OTC operator bank cards were frozen. On follow-up, they were asked to conclusively verify that their sources of funds were not from black money operations or other illegal activities. How do they want me to show them that? It's a very spicy province. One miner told this publication that his ICBC card was frozen on June 4th. Other miners and operators had theirs frozen on June 4th and 5th. City officials have expressed orders, this is a quote, to stop the proliferation of illegal activities. So, really, we've seen this for a while, cracking down on Bitcoin mining activities. Obviously, China is pretty infamous for going back and forth between, legalizing cryptocurrency and not legalizing cryptocurrency. Trading is illegal there. ICOs are illegal there. But however, to their benefit, they have made Bitcoin and other crypto assets property, right? So you do have property rights to them. So you can legally hold cryptocurrency in China currently without fear of legal repercussion from the CCP. Of course, they're an evil Chinese communist nation. They're going to do what they want. However, trading is illegal, and ICOs are illegal. Now, mining certainly is legal. Siphoning illegal electricity is certainly not legal. And I would say there is not, there's not 100% invalidity to this, right? Obviously, this is not a good thing, and we'll get into how this can affect price here just a little bit. But of course, it is becoming, as we covered yesterday, it is becoming harder and harder and harder with more advanced on-chain analytics and firms like Chainalysis, and CipherTrace to be able to launder or dispose of your ill-gotten Bitcoin, whether they come from exchange hacks or whether they come from Ponzi schemes. But Bitcoin, because it's a public blockchain, those coins, those UTXO splits can be what we call blacklisted, right? And it's not like anything actually happens on chain. Those coins aren't marked in any way on chain. But those UTXO splits are identified, right? The wallets that they've been broadcast to are identified. And exchanges share this information with one another. This is, how recently there has been preservation that's what I'm looking for. The prevention of the laundering of stolen cryptocurrencies on exchanges like Binance and Huobi. All right. So hackers deposited funds to these exchanges, but they were known to be stolen from Bitstamp, for example, and they were not able to be sold. The exchanges confiscated those funds, and what they did with them, I don't know, probably started utilizing them for staking. However, if they're not Bitcoin, but still, it prevented the hackers from selling their ill-gotten gains. So selling on exchanges, laundering ill-gotten gains on exchanges is becoming harder and harder, and these individuals are going to turn to OTC desks. And although there are some very, very professional and, upscale OTC desks, listen, there's OTC desks that run out of garages, right? There are OTC desks that run out of garages. Not so much, not ones that you've heard of. But again, OTC is just, do you have an operation where you buy and sell Bitcoin? Some are willing to do this legally. Some are willing to do this illegally. This is just a thing. It's a growing, broker dealers were very much the same, right? Where it was very loose back in the 70s and the 80s. Very, very wishy-washy regulation. And even worse earlier on in the day, the early 20th century. But obviously Bitcoin's new, its market is going to grow, its professionalism is going to grow, and its standards are going to grow. However, that being said, if you were going to launder your ill-gotten gains, OTC brokers is one potential way that you can do it. Now, this brings up a whole lot of risks, especially if you were trying to offload, ill-gotten gains and their blacklisted coins potentially by exchanges. It depends on how good the blockchain, the chainalysis of the OTC desk is. The more prestigious OTC desks have very advanced chainalysis, or they directly hire companies like CipherTrace and Chainalysis. That's one of the big reasons why these companies exist. It's not just for governments, but also for OTC desks and brokers and exchanges, to prevent them from getting into regulatory nightmare, or from breaking the law themselves, or being accomplices or colluding in a crime. So there's not 100% invalidity to this. At the same time, it's not a super good thing to see, because again, one of the problems with governments is that they can only paint in very broad strokes. If you've ever seen, listen, the way that government solves problems is they throw a huge military at it, which is never tactical. They throw a lot of money at it, which never ends up getting to where it needs to belong. Or they end up throwing promises at it, right? And by promises, I mean, we're going to throw money at it and tax future generations out of their birthright. So governments are just generally terrible at dealing with problems in the first place because they are bloated, centralized, and inefficient. And the CCP, a little bit more so. So now this goes on to talk about Bitcoin miners liquidating for fiat and USDT. I certainly wouldn't blame them. It says here, ordinarily miners to sustain their operations, which is usually resource intensive, they mean to say, demanding millions of dollars to cover for electricity, rent, and cooling costs, have to liquidate their crypto holdings for fiat currency. So we've covered this a whole lot before, right? And this was overall my opinion for quite a long time. But, I've done a lot more research on this and actually talked to individuals that know more than I do, which is typically what I do when somebody lets me know that I'm wrong about something. And this is really not the case, right? This is certainly the case for some mining operations, but other, and most, I would argue, mining operations are not so like month to month that they need to sell immediately their Bitcoin holdings that they just mined to cover costs. It's not like they're living hand to mouth. No, they have built up a large surplus of Bitcoin. They have built up a large surplus of capital. They have access to investments. They have access to loans. Some are private corporations and have investors and have backers. Okay. So this seems more targeted at smaller mining farms. And while they certainly do have a good chunk of Bitcoin, keep in mind that the larger mining farms, this is not affecting. So if you hear anybody trying to point to any kind of data like this, as this might affect the security of the Bitcoin network or the ability to process transactions, that's silly. Bitcoin hash rate is currently where I like to call like in the plaid zone of hash rate. We could certainly keep the network secure and efficient with far less hash rate. The reason there's so much hash rate is because there's economic competition and incentive to mine for the rewards, hundreds of thousands of dollars every single day. And this conversion to the UN or USDT is a loophole where money can be laundered or black money injected into a system. To stem and even cut off this probability, Chinese officials seem to be regulating miners while keeping an eye on Bitcoin and crypto over-the-counter desks. This doesn't this is a little incorrect here. So certainly selling your funds into USDT can be done without government knowledge, and certainly can be done OTC. OTC desks are one of the largest holders of Tether out there. But saying that USDT is like a loophole is like saying you can sell Ethereum for Bitcoin, and that's a loophole. So it doesn't really matter. And apparently selling it into the UN does avoid some of the international regulations that selling into the dollar does, because that's their native currency. They're selling into their native currency. So they only need to deal with the laws and legislations of China. They don't need to deal with international regulations like selling into a foreign currency that would entail. So I don't know. A little bit of misinformation there, a little bit of misquoting. I think trying to make a headline or really a tail line at the end of this, but let's go take a look at the facts. Let's go take a look at the data. All right, so the first thing I want to look at is the Puel multiple. This is a good indication of when Bitcoin is in an accumulation level or in a distribution level, right? When Bitcoin's price is in the red zone territory, when the Puel multiple is in the red territory, is a distribution level. When it is in the green territory, it is in a accumulation level. Obviously, as you guys know, post-halving, the Puel multiple moved for the first time in a long time, actually briefly over here on March 19th at one of the peaks of the March meltdown. The Puel multiple did move into accumulation zone, and we are moving on up, baby. No distribution yet. All right, let's look at ASOPR. This is adjusted spin output profit ratio. This indicates generally good times. Generally, whether Bitcoin's price is appreciating or trending to the upside or depreciating and trending to the downside. We see here that ASOPR is in the positive. This is a centered oscillator. So Current ASOPR is sitting at 1.019. This is a good reading. This is also, we see here after a bounce trending to the upside, I would like to see us make a higher high above 1.027, but we'll keep an eye on this. This certainly is positive, and ASOPR is a good indication of when we're going to see more pronounced trends to the downside. We do not see this yet at that point in time. This is still hinting at upside. All right, let's look at let's look at exchange net flow. We continue to see negative net flow, right? Indicating that Bitcoin is not being transferred to exchanges. Bitcoin is continuing to be pulled off exchanges. This is not bearish. This is bullish. You don't pull off the exchanges to sell. All right. Let's look at the miners to exchanges. How much Bitcoin are miners sending to exchanges? We're at lows. We're at absolute lows. We're not at highs. We are not at highs, indicating pretty deep sells. So let's look at this indicator over the last 2 years. Well, by golly. I mean, I'm just going to go ahead and call it here, right? With just a cursory glance at this, right? And I haven't done the fullest back testing on this, but just with a cursory glance, we can see that the peaks, the highs and lows here typically occur at market bottoms. Right? There's some exceptions here. I noticed some things where we're like actively trending and moving because there are going to be some changes. But again, we can see this overall metric. Let's go back a little bit. We can see this overall metric of amount of Bitcoin being sold to exchanges trending to the downside, lower highs over time, and fairly consistent lows down here. And we are at lows and rising up a little bit. So again, not bearish. I would argue that this is bullish, coupled with market exchange inflows. And let's look at hash rate. Hash rate on the way back up. Hash rate on the way back up. What do you know? Hash rate still in the plaid zone. Difficulty adjustment. Difficulty is adjusting downwards. The Bitcoin network dynamically adjusts. And that's about all I really want to look at on glass nodes here today. Let's get into today's main story. All right, before we do that, we have covered a whole lot, guys. Thank you so much for staying with us so far. If you enjoyed the content, make sure to smash the like button. It's right below you there on the YouTube video. You can certainly do it. It's just right below my face. If you're watching us on Twitch or DLive, you can support us with a follow or subscription. Boom. Yeah, another way you can support the show is, well, a whole lot of ways, I guess. Like leave a comment, like subscribe to the channel. But another way you can support the show is by getting off of BitMEX. If you're going to be trading Bitcoin derivatives, at least you could trade them on a respectable exchange, for the love of God. BitMEX, disgusting. We do most of our trading on ByBit. So, as I love to watch, let's go check in with our friend, junior analyst Jason, and see how he is enjoying the switch to ByBit. Let's go check it out. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at ByBit.crackingcryptocurrency.com and rest easy for a change. All right, let's get going with today's cryptocurrency segment. Today in the news, we're going to be covering the Microsoft Ion Network launching a layer 2 protocol on top of the Bitcoin mainnet. Is this good? Is this bad? Does this mean that we're going to be auto-chipped and viruses are going to be inserted into us in our sleep? You be the judge. We're just here to cover the news. Let's go with today's cryptocurrency segment. All right, so please save your booze for the end. The tech giant Microsoft, I know, evil. But they have just announced that they are launching their decentralized open source identification network that they are calling Ion. And it is actually open source, and it is running as a second layer over Bitcoin's blockchain. This is a second layer solution on top of the Bitcoin network, right? Now, this technology is going to aim to provide you, the user, probably not you, because if you're watching this channel, you're probably not going to use this. You're probably filling up the comment section right now with how evil Microsoft is and how dare I talk about Microsoft right now. But it's aimed to provide you, the user, with the ability to create a decentralized digital identity, a digital credential, right? That you can use to, it's like a driver's license, university diplomas, or even, again, yes, here we go, digital immunity certificates, which could be used to accurately identify individuals online. Alternatively, these digital credentials can be used to log into websites or applications that support the credential system, right? So very similar to any kind of signature system, rather than relying on third-party system providers that most of you are probably already using right now, such as logging in with Facebook or Google into websites. And guess who owns your login credentials and has the ability to administratively manage your profile? Google and Facebook. Yeah, that's right. All right, so this is a decentralized alternative to that. Now, Ion, of course, can be used for many different use cases, but with obviously the impetus for developing this now, or at least the reason why they say that it's being developed right now, is the continued spread of the coronavirus outbreak, right? Meaning this technology has been geared toward health certificates and for contact tracing purposes that we keep hearing so much in the news about. All right, let's go to our second link for this story. Now, this is the official announcement from Microsoft, and they are calling these little doodads, these little credentials, decentralized identifiers, or DIDs, right? And oh man, I should have thrown it in there, but I just can't, right? Sorry, guys. And explains how their decentralized nature, according to them, ensures that users are going to have control over their own data, right? This is not administratively controlled, right? Let's see here. Let's actually find the... Yeah, we see this, starting off with a quote from Daniel Buckner. He's one of the team members and developers on the Sidetree protocol, talking about pretty happy how he is happy about this. Been work in the long time for the making, and he gives, they give credit here. They give credit here to Bitcoin. The inception of Bitcoin a decade ago reinvigorated cryptographers, computer scientists, and distributed systems engineers with new optimism about the possibility of decentralizing many aspects of digital life. A subset of these folks who also participate in the identity community began working on the problem of decentralized identity. Their efforts are starting to take shape as we've explored ideas and approaches to the underlying technical problems in groups. As decentralized identity gained momentum over the next few years, what started as optimism and ideas evolved into something many believe can shift ownership and control of identity and personal data back to individuals. Now, I will say that a decentralized alternative to storing my identity that allows me to log into websites and manage applications, especially if it gets widespread adopted, is a better alternative than allowing yourself to be logging in with your Google account and Facebook account. If you're doing things like that, you have really no idea how widely you are, abrogating any kind of online privacy or anonymity that you are trying to build for yourself. Because Google, Facebook sees exactly what profiles you're logging into, and everything that you're doing. Doesn't matter if you use a VPN, because you've already involved your digital identity that is tied with something else. Of course, you can, make burner Google accounts, always recommended. But still, it is, digital identity or digital privacy is not as simple as VPN advertisements would have you believe. It's just not as simple as turning on a VPN and now you're private. You're not. There are so many other layers of communication that are occurring between you and the access portal that you really need to take a comprehensive approach if you want to be anonymous. And for most users, that's not going to be necessary. They're not going to want to do that anyways. Obviously there are going to be power users and privacy advocates that are going to want to and want that option. But I want to point out here that there are a lot of current blockchain projects that are attempting to solve this very same problem of digital identity, and this is one, right? Being able to have some form of decentralized blockchain or some form of protocol where you can access, store, create, and manage your own user credentials, right? And this essentially would allow you to verify your identity without giving up any personal data that you don't want to anywhere, right? It's just verified with the protocol. Now, we're going to have to look into the nitty gritty of this. And so far, I haven't heard anything rampantly negative about this. It's on GitHub. It's open source. You can review the code. It's going to run on Bitcoin. So this is going to get a lot of hate, obviously, because it's because it's coming from Microsoft. But I just want to point out, kind of the haters out there. Do you use Linux? Do you know that Microsoft finances the vast majority of Linux kernel development? Yes, Microsoft funds many, many, many open source projects because it keeps their developers happy. And this is how we actually get the majority of development and funding in our open source projects. So while we may not, unfortunately, a lot of viewers are just going to associate the word Microsoft and any project that they create with like the negative aspects of what can come out, or probably Bill Gates and their dislike of him and vaccines. But not everything that comes out of Microsoft is bad. Whether this is good or bad, I don't know. But for example, Blockstack, which is a project that I quite like. I had the pleasure to sit down with Jude Nelson at San Francisco Blockchain Week. He actually did the intro for today's video, and you guys can check out our interview in our cryptocurrency playlist. What Blockstack is doing is basically attempting to do this as well. It's not their main priority, but it's, they're building the decentralized web. This is something that, what was that scam coin? It was trying to build Web 3.0. Can't remember off the top of my head. Somebody's going to remind me in the chat. Web 3.0, Blockstack is attempting to build Web 3.0. They're doing a very good job of it. And it has that kind of same concept, right? Where you create one digital identity that's verified with the Blockstack network, and you're able to log into all Blockstack, all websites on the Blockstack network, which is very convenient, right? This has been a problem for a long time. This is a huge problem that we have every single different website. You have your own username and password. You got to use a password manager. That's the central point of failure. You got to back that up. Now you got a second point of failure. And it's just inefficient, right? One digital identity that is as anonymous and private as an individual can possibly make it. Take control back from the platforms, take your identity back from the platforms, and be able to browse just with proving that you are who you are through your digital certificate, right? So these DIDs, more like DI don'ts, are a new type of identifier that enables verifiable and decentralized digital identity, right? A DID is defined as being able to identify any subject, like a person, an organization, an object, a data model, or an abstract entity. Yeah, kind of like some of the CC staff members. Anything that the controller of the DID decides to want to have identified, right? Now, later on in this article, Buckner will go on to describe ION as being designed from the ground up to operate independently of centralized parties or trusted intermediaries, including Microsoft itself. And because of that, the network doesn't rely on any special utility token. So there's no ICO scam here. Go you. There's no trusted validator nodes, avoiding the Hive scam, or any additional consensus mechanisms. Because, as he explains, this linear block, Bitcoin's linear block chronology is the only consensus ION requires to operate. So they're going just off of the blockchain of Bitcoin, right? And the private keys for your digital identity here are never going to leave your hands. All ION operations are signed locally on your device. So because they're signed locally on your device, you do have some assurance that only you, the user, can modify the state of your your DID, no matter how you choose to interact with the ION network, right? And they are going to be rolling out or have rolled out the public testnet, so ION users can start creating their own DIDs and authenticating their login to sites, apps, and services that do support the standard. It's called OpenID. Self-issued DID is the standard for entry. And additionally, of course, because they're a business, enterprise applications are going to be made possible. So companies, other organizations could use ION to issue digital credentials for their employees, for their, for their contractors, for their plumbers, whatever. And, so kind of looking ahead on the roadmap for ION, right? They do plan, obviously, as all small communities want to do, grow the network's community, gather feedback, contributions, which includes exploring new use cases, as well as sponsoring hackathons, right? So this is good. I like to see this. I like to see well-funded, but DIY and community-driven initiatives and projects, right? With GitHubs, public repos, and the ability to contribute and make the network greater. I don't like privatized, centralized things, but again, One of the reasons why those can be better out of the box is because they're well funded, right? So you can track the project's progress by checking the GitHub repo for the Sidetree and Ion project. The final version is going to be launched by the fall of 2020. Looking at our last link here, this Ion project is just one of the initiatives that's coming out of the Decentralized Identity Foundation. And the DIF has some pretty big industry players coming together. And granted, their kind of stated goal is to fast track identity tools that anyone could use and their current use cases for the COVID-19 crisis response program, right? One of the big things that governments around the world keep mouth breathing on is contact tracing. There's no way to do this effectively. And unfortunately, although this would be a better way to do it, I do not think that this is going to be rolled out in time. I do not think that this is going to be rolled out in time or receive enough adoption to make that any more viable, which means to me, the idea of contact tracing is absolutely insane. It's not going to work. It's just not humanly, realistically possible. All right. Almost every group, I wouldn't say almost every group, but there are many, many groups in the blockchain industry scrambling to come up with use cases, right? For digital identities, right? Whether that be partnerships with government agencies that, want to replace the whole key card mechanism of identity verification, or again, for some sort of contact tracing and to track the spread of infectious diseases, which seems, again, far more unrealistic to me. The invasiveness of what would be required to pull that off with any degree of efficiency is absolutely ridiculous. So there are, of course, I'm certain, and according to the founder of the DIF, conversations going on with governments, but no agreements have yet been reached. But developers are moving pretty fast. Projects are jockeying for position to demonstrate to basically any investor, but certainly government authorities out there, that this technology can be powerful at serving their identity needs, which is not a bad step forward for decentralization if you do believe in the two-line track that decentralization can be embraced by governments. I doubt it, but maybe some people are more positive than me. Right? And of course, right, the race is on in recent months for companies to develop any kind of solutions for high-tech emergency ID measures, because that seems to be a sudden need by governments around the world now. Like, we need to be able to respond quickly. It's a good thing. It's a good thing, right? But not when you've shown such a kind of an inefficiency lately. But here's the hot take. There's going to be pushback from people who view this technology as controversial or even dangerous, right? In May, if you'll recall, Elizabeth Ramirez resigned from her advisory role at ID 2020. That was a consortium for DID creators, saying she could not be part of an organization overly influenced by commercial interests that only pays lip service to human rights, right? Harry Halpin, CEO of the privacy startup NIM, said that some of these efforts are simply repackaging previous work, describing ID 2020 as just the latest attempt to violate people's privacy using feel-good rhetoric, right? And according to the latter, ID 2020 is just part of a larger business plan of Microsoft and IBM and their ambition to build identity systems that will underpin our future societies, right? Governments will be eager to establish the identities of who owns these keys, while making these next generation ID systems mandatory, all the while using terms like open standard and decentralized to describe them and really run cover for what is a privacy smashing scheme, right? Or as the skeptical Zcash developer Henry de Valence remarked, that it was the duty of technologists to ask what types of systems we're creating and what kind of social structures do these things create. And there are certainly positive ways that this technology can be spun, and very negative ways that this technology can be spun. And again, I do want to echo again what that Zcash developer said. It's really up to us. It's really up to technologists and developers and users of platforms to be active and initiate in which direction these things go and what societies these things create. So let me know your guys' comments down below. Controversial topic. We get a lot of comments whenever we cover anything that Microsoft does. But I appreciated you guys' comments from the last one where we covered the kind of body motion cryptocurrency generation system. Enjoyed your thoughts on that. This is certainly a run up to that. Do you feel that this is, overall benign? This is a good thing. Echoing back to my arguments of, it sucks that you got to log in for, every single website, and that right there is a huge bash against privacy and anonymity? Or do you feel that this is dangerous and that it's inevitable to build technologies like these that do not facilitate and foster less private social systems and less private interactions with the private individual, the sovereign individual, and government? Let me know in the comment sections down below, guys. Thank you very much. That's our cryptocurrently segment. That is our cryptocurrently segment, guys. If you guys are still enjoying the content and you haven't hit the like button, now is certainly the time to do that. Certainly the time to subscribe. Do it all for the lulz. And also, if you guys want to support the channel, tons of links in the description down below. We're going to get back into current price. I do want to kind of wrap up today's show. Let's do a brief update. S&P 500 slipping more. The S&P 500 index down 168 points. NASDAQ down 468. Dow up, down more than 1,600 points. Jesus. FTSE right where it was at. Well, it's because it's closed. Let's see. Let's go back to Bitcoin's price here. Bitcoin's price, after a brief pop back up 9,300, is being accepted below 9,300. This does begin to look more bearish intraday to me, although we do, again, see more aggressive retail selling coming in. Still not hitting that 0.5 level yet. So some gauge for hope. But overall, we can see via this backwardation that the massive volume coming in right now is retail selling. This is not when large players enter to the downside. I would still argue that for the foreseeable future, for the current intraday, the play would be to the upside. High risk, though. All right, we already covered the major indices, how most charts are going to be indicating no trade signals on the daily due to risk. Bottom feeder trades still in play, actually. And depending on whether or not we close with the no trade or not the no trade, we will potentially be looking for either swing shorts or to continue to remain hedged and flat on today's daily close. Let's see here. We do see some good buys coming in, about 5 million to the buy side within the last couple of minutes. almost 19 million to the buy side over the last minute compared to 8 million to the sell side. And let's take a look at the Tensure. Are you going to give me the chart, or are you just going to what's going on here, bro? Go look at BitMEX stats and grab liquidations here. Hello? Let's see here. ETH Bitcoin starting to climb up just a little bit. Of course, everything pretty deep in the red. Yeah, jockeying for position. The bid ask at 93.10. Market order flow to the sell side. Social index rising a little bit, but still negative rising open interest. This price moves to the downside. Rising open value. That's generally positive, actually. What else did I want to look at? Let's take a look at the big picture here. Overall, Bitcoin still on the weekly time frame, locked into this red box territory, unable to break out of it. Downside below 8,000, upside above 10,200. Can we get a weekly close to the upside, to the downside? Tune in next time for Breaking Bitcoin. No, but here's the thing, guys. You have to be patient at these areas, right? You have to wait and wait for the trend to emerge. Take the trade when it emerges. Follow your system. Test your system thoroughly to know that you do not have a choppy, over highly sensitive system that has been curve fit to previous bad data due to bad input settings. Follow the best practices for strategy creation and take the trades. In times like these, particularly when we're in these areas of historical support, historical resistance, or historical chop, that would be 8 to 10,000, 6,000, and 3,000, are areas to avoid making massive movements on, because we just enter into high agreement on price. And when there's high agreement on price, we have high chop, high volatility, high whipsaw. So I will be posting as normal my trading recommendations to the group this evening. I'm going to be taking care of my Forex and ETF trades, as well as my CFD trades this afternoon. And I will be wrapping up our current leg of cryptocurrency trades this evening, I assume, depending on what the charts say, with senior analyst Alexander. I feel like it is almost 2 p.m. Wow. This is normally where I'd bring the guys on, and I know we've got a lot of good viewers today, and I'm sorry I don't want to uncapitalize on that, but I got a ton of work I got to do, guys. I got to analyze the markets, and I got a mentoring session, and yeah, the DJA hit the circuit breaker. Yeah. And I got to continue with the work getting the educational content onto the website, guys. A lot to get done. So I really appreciate it, guys. With that being said, let's head to the outro. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update with your host, Justin Wise. Thank you guys for all the support. If you appreciate the content, subscribe, like, share this video, leave a comment down below. Question of the day is, what is your system signaling for, right? I'd like to get the kind of consensus for you guys. Do you guys feel it's a buying opportunity as we are touching range lows, or have we shifted the trend into the short side, right? I'd like to see what your guys' strategies are signaling. Let me know in the comment section down below. I will pick a lucky one of you, and I will give you a shout out on tomorrow's show. With that being said, if you guys would like to learn how to objectively trade the markets, learn the emotional discipline, the risk management necessary to have a sustainable career in this sector, and begin building your own objective data-driven strategy, join our community of professional traders at premium.crackingcryptocurrency.com. Links are down in the description below. If you guys would like to support the channel, whether that is through TradingView, whether that is through ByBit, whether that is through 3 Commas, all good tools, all good options, all good platforms. We will be back tomorrow at Friday at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Analysis. If you're subscribed and you got the bell icon on, make sure to stay tuned for this evening's Breaking Bitcoin Bits, where we break down the major news nuggets of the day. Maybe throw in a little TA. Just depends on how we're feeling. Look forward to some new San Francisco Blockchain Week interviews with some crypto people, right? We've got the interview. Well, we already published the interview with Pi, but we got the interview with Casper Labs coming out pretty soon. We got the interview with Blocks, with Kava Labs, with Storm, right? Simon from Storm, CEO of Storm. So we've got a lot to talk about. Let's see here. I don't think I forgot anything. Yeah, pretty good. All right, guys. I will see you guys on the other side. Make sure to be excellent to one another. We're all in this together. Be nice in the troll box throughout the day, regardless of how your position is doing. And trade safely, guys. I'll see you tomorrow. Cheers.